In this presentation, we will process payroll after adding dental insurance that is employee paid after taxes, so we can compare the payroll after including the dental insurance to that processed before adding the dental insurance. We will do this within QuickBooks. Here we are. For more accounting information and accounting courses, visit our website at accountinginstruction.info. We are in the home page. We currently have the open windows open. You open the open windows, go into the view drop down and open windows list. We're going to go ahead and process the payroll. So we're going to be down here in the employee center. Another month has passed. We're going to process payroll for the month of April this time. Go into the pay employees down here. And then we're in the paid version. So we're going to have this screen. We're going to go to pay employees. If you're using the manual version, you want to test things out, then it'll look similar to this screen once you get here. We're going to be processing payroll as of the end of April, so April 30th, and then we're going to pay it the next day, 05/01/18. So the end of April, we're going to pay it the first day of May. Everything else looks much the same, so we're going to go ahead and check off our one employee and take a look at Anthony's paycheck by clicking on it. Same pay, 161 and 1 hour of overtime. That's going to give us our same hourly and the same overtime gross pay. Then we've got the 401k that we included last time. That's going to come out, not the matching portion, just the employer portion. And now we have the dental insurance. So the dental insurance is being pulled out now to get to our net check, in essence being paid by the employee. We're going to pay it as the employer. We're going to write the check. But it came out of the gross pay here. It's coming out of the gross pay. So here it is. It's on this side, not on this side. It's coming out of the gross pay. We've got the federal withholdings. That didn't change at all because, and it would if the FIT, the taxes would go down because of this. So they're not getting, in essence, the tax benefit of us paying this dental insurance. It's just that we're providing the benefit of paying it out of their check, so they don't have to actually write a check for the insurance, and maybe we'll get a better plan through a group plan or something like that. But they're still paying it here, and it's not really deducting, it's not changing the federal withholding. It's not going to be something that's going to reduce their taxes as far as the payroll tax level. So that's how it's being affected. It hadn't changed, in other words, the federal withholding. The Social Security and Medicare aren't changing. They haven't changed since the beginning, because the 401k and the dental don't change. The Social Security and Medicare, they still are calculated based on the gross pay. And then the California taxes here. And then we've got, which again, states will change from state to state. On this side, the employer portion being paid over and above, we've got the 401k matching, the matching portion. Notice what we don't have, of course, is the dental. That's not being paid over and above. It's included in the gross pay. It's just that we're not going to give it to the employee. We're going to give it to whoever the vendor for the dental is. And then we've got the employer portion of the Social Security and Medicare, the matching, and the FUTA has been reached for both state and federal, FUTA and SUTA, state unemployment and unemployment, federal unemployment. So we're going to go ahead and say save and close and continue with everything looks good. So I think everything's okay. So we're going to continue with that, and we're going to create the paycheck once again. If we take a look at the print, the stubs, so we can see where we're at and a preview. This is what we would have to give to the employees. We've got the current paycheck we just wrote. The only thing that's up here in the deductions is the 401k for the employee, because that's really what's going to affect the taxes in terms of what's going to be effective on the taxes. And you'll notice the dental insurance was put down here as a deduction down here, not included in something that's going to be reducing the taxes. So dental insurance is taxable. In other words, the wages related to it are taxable. It didn't decrease the gross wages in our calculation, whereas this portion did. And then the non-tax company items, this is going to be the employer that was paid in over and above the gross pay, what the employee is receiving over and above the gross pay by the employer matching of the 401k. So we're going to close that back out. We'll close this out. We'll close this out. And then let's take a look at the check that was written. Go into the banking, use register, and checking account. And then we only have the paychecks here. This is the last check we wrote, so we're just going to double click on that. And we can see the differences, obviously, in the paychecks here as well. If we go into the check amount and paycheck, we'll get to the same kind of information. The actual check, of course, here, the details. And so these are the checks we've written out. That's the only activity we have so far in our check register. For more accounting information and accounting courses, visit our website at accountinginstruction.info.